How much should a founder pay themselves? Let's talk about one of the most uncomfortable questions founders avoid. How much should I pay myself? Not your team. Not your contractors. You. Some founders pay themselves nothing and call it hustle. Others pay themselves too much and quietly weaken the business. Most just wing it month to month and hope it works out. If you're a founder in Canada and you're unsure how to handle your own pay, this episode is for you. And if you want clear, Canadian-specific money strategy without the noise, subscribe to Maple Money Playbook. Let's reset the conversation. Founder pay is not a reward. It's not a bonus. It's not something you earn once the business feels successful. Founder pay is risk management. If your business cannot pay you something, it's not stable yet. It might be growing. It might look impressive on paper. But it's still fragile. And here's why this matters. When founders don't pay themselves properly, personal financial stress starts leaking into business decisions. Suddenly you're rushing choices. You're saying yes when you should say no. You're avoiding necessary risks or taking reckless ones. Not because you're bad at business, but because pressure is driving the bus. So the goal of founder pay is not optimization. The goal is stability. Here's the rule that clears up most confusion. Founder pay should be modest, predictable, and boring. Not zero. Not lifestyle driven. Not tied to good months. Boring is good. Your pay has one job: cover your personal baseline so your brain can focus on building the business. That's it. This is where founders usually get stuck. They tell themselves, I'll pay myself later. They wait for revenue to feel big enough. They treat discomfort as proof of commitment. But here's the truth. Chronic financial stress doesn't make you a better founder. It makes you a reactive one. And reactive founders make short-term decisions that hurt long-term outcomes. So let's get practical. Before you decide how to pay yourself, you need to know what your life actually costs. Not aspirational spending. Not lifestyle upgrades. Just stability. Housing. Food. Transportation. Insurance. Basic personal expenses. That number is your minimum viable pay. Not your dream salary. Not your future lifestyle. Just the amount that lets you operate without constant financial anxiety. If the business can cover that amount consistently, you're already ahead of most founders. If it can't, that's not failure. That's information. It tells you the business is still in survival mode and needs attention, not guilt. What you want to avoid is financial whiplash. No pay one month. Too much the next. Then nothing again. That pattern creates anxiety and trains your nervous system to react instead of plan. A better approach is choosing a fixed amount and adjusting it infrequently, based on real trends, not emotions. Healthy businesses change slowly. Founder pay should too. Now let's talk about how founder pay shows up in Canada. Early on, it's usually a salary or an owner's draw. Dividends come later, once income is stable and the structure supports it. Early stages don't need complexity. They need clarity. Trying to optimize too early, complex tax strategies, dividends, over-engineering, usually creates more friction than value. Structure first. Optimization later. Now let's address the guilt. A lot of founders feel uncomfortable paying themselves before the business feels successful. They feel like they haven't earned it yet. But here's the reality. Unpaid founders are subsidizing the business with personal stress. That stress shows up in leadership. It shows up in boundaries. It shows up in burnout. Paying yourself responsibly isn't selfish. It's professional. It also reinforces one of the most important principles we talked about in episode 1, clean separation between personal and business finances. When those lines are clear, everything gets easier. As your business grows, founder pay evolves. You move from survival pay, to stable pay, to strategic pay, and eventually to optimized compensation. But you don't skip steps. Founders who try to jump straight to optimization usually end up confused, stressed, or cleaning up messes later. Here's the real takeaway. Founder pay is not about lifestyle. It's about focus. A calm founder makes clearer decisions. Clear decisions compound. That's why this topic matters more than people think. In the next episode, we'll break down one of the most confusing money decisions for Canadians: whether to prioritize a TFSA, an RRSP, or a corporation, and how to think about that choice without overcomplicating it. If you want straightforward, Canadian-specific money strategy built for founders and builders, subscribe to Maple Money Playbook. I'll see you in the next episode.